Alright, welcome back guys. I hope you're all doing well. This video will be about building that higher time frame narrative on our charts to assist us on the lower time frames and in taking those high probability trades which are in line with those higher time frame flows. Now, what we must understand when we are on these higher time frames is that these candlesticks portray more of a macroeconomic perspective, whereas when we are on our intraday time frames, we are focusing more on intraday liquidity dynamics. So we must not, overlap the two too intensely, because just because our higher time frame flows are bearish does not mean that we can, that we can't take advantage of a intraday long position. Now, as you can see here, we have this weekly time frame on the euro. And when I'm building this higher time frame narrative, the first question I like to ask is, what was the intention behind the most recent move on the left? So our most recent move on the left is this leg over here. And if we begin to dissect that and look at this, the finer details, we'll begin to make that larger picture. So we can see that price breached this high over here, right? Came back in, we stuck around here for a while. Price then grabbed the liquidity above this high, injected liquidity, and then you can see we cut through all this volume here, this price action here, and left behind this gap. Now, that is very important because that gap more or less shows intent in the market, and what lies behind that is that there was not enough opposing liquidity to fill the sell orders that were coming in to the market. Now, as that liquidity is being injected, price then seeks those opposing levels to find that opposing liquidity, and you can see that we begin to distribute liquidity at these lows. Now, after price has distributed liquidity, it needs to pull back into the range, seek that new liquidity to then inject that and seek lower prices. And we can see that price pulls back into this gap and finds that fresh liquidity there. Now, a concept that we must understand is that at these gaps, large institutions will acquire or offload large positions, and that's why we see these, significant price moves from these levels. So what we want to do is, point these out or mark these on our charts as significant levels, and then drop into those lower time frames and see how price reacts to then, take that data and make useful and logical decisions with them. We don't want to just say, we have a gap here, we're looking to, jump in short or just place a limit order there. That's not what we do. We're waiting for price to react and tell us what it wants to do next. So we distribute, and these lows, right, you see these lows like this. That is, don't know why it done that, but that is, distribution, and we can anticipate those lows to be taken out. Price comes up here, grabs the liquidity above the previous week's high, then we dump again, leaving behind that intention or that exposed inefficient price, and that is what tells us that there was an overwhelming amount of sell orders coming in to the market, pushing price lower. We then leave behind this gap over here. We do have this gap just above, however, I do not want to clutter the charts. Also, I want to point out that I did do this all in live time. I'll try and add some pictures around to show you. However, I did, track this all in live time and have my live thoughts and annotations dotted around. I pointed out it was live time on the axis, but I just thought I'd put that out there before anyone tries to say hindsight, right? So we have that gap there getting left behind. Now here, again, very important, price runs down, takes out both of these lows. The fact that we don't distribute at these lows shows that this move is very strong to the downside, right? Very strong to the downside, and we end up taking this low, right? This low as well. This was low resistance. Price cut through both of those. We end up breaching this low, and then we get this distribution at these lows. And again, that is a key concept to understand, whether price is injecting or distributing liquidity, as that will help you build the narrative. If we're injecting liquidity, a lot of the time that level becomes protected and it will trade into the opposing direction and take out any distribution levels. So this low being a level of distribution and our sell side liquidity, right? A concept that I'm sure a lot of you are familiar with. Grab, we push lower, we distribute. Now, like we said, after that distribution, we can anticipate price to pull back into the range, seek that new liquidity, to inject that and seek lower prices. Now, we've built that, narrative of, okay, cool, price is injecting liquidity and we're pushing lower to the downside, but where is our overall target on this time frame? So if we zoom out a bit and we look over to the left, we can say, what's our, most important opposing array here? And in this case, it's this weekly gap, which I know a lot of people have been eyeing up. All right, so if I just take that, magnet that, talking about magnets, that becomes more or less a magnet for price to drop down into and distribute liquidity off at. So now in our minds, this is our higher time frame draw on liquidity, right? Which is again is a concept that you must understand. Where is price drawing towards? So we understand that, cool, this is a distribution low. We know that price is most likely going to take this out. We have our draw on liquidity below it. This is also a draw on liquidity, but this is our main draw on liquidity. We have all those levels to the downside, which we know price can target. Now, what we're waiting for is a level, or we're waiting for price to pick up that fresh liquidity, show us that liquidity has been picked up, and then follow that, flow to the downside. Of course, we can take longs into this level if they present themselves. However, again, we must understand that those will be the lower probability trades. Trading in line with this direction will be the highest probability trades. So again, our arrays on the weekly are just this gap here. This gap here would be of interest. However, we would cross that bridge when we get there. If this level was to break and price was to breach this level or close above, then we would begin to say, okay, cool, let's move our eyes to here and this, more voluminous, pretty sure that's the word, area. So let's play price and see what happens. Cool. So this new week breaches the previous week's highs, more or less grabs liquidity from there. However, this is not, the be all and end all. Just because price wicks above doesn't mean that we can't wick above, come to that midpoint. You see how we haven't tapped that midpoint yet? That is an area to keep your eyes onto, because price can easily do this and then give one more push into that. We must drop into those lower time frames, try and dissect what price is doing and see if, okay, cool, we've picked up the liquidity, we're rolling over, we've breached some volume bands, and we can now start injecting to the downside. Again, that comes from the lower time frame. The weekly time frame, what we're doing here is, reading the price action and anticipating where the next weekly candle can expand towards. In this, scenario, we're expecting an expansion towards the downside after potentially picking up liquidity from one of these areas. So again, we sweep the highs, we close below the previous week's close, and now we can start to drop into the daily to do what I just mentioned and be a bit more analytical, right? Don't want that. Sorry, don't want that. Don't want that. Cool. So I've left this one on just for perspective, right? So we can still see that weekly level. Let's move this along to here. Now, to keep it short and brief, I don't want to overdo it on this chart, and I just want to keep it simple. I say simple, but prices now breached this high, which was that weekly high we had mentioned, right? Which we can call that buy side liquidity over here, right? We pick up that liquidity. We now come below the previous day's close, right? We take out the previous day's high, come back below, close below, and now we have to pay attention to what price does here, because if this begins to expand and this becomes an order block, we want to see price hold below this level, and especially that the mean threshold. So in fact, let me get rid of this first and we can see what price does. So even that alone, because we respected it, I would consider that somewhat an order block, right? It hasn't created any significant moves to the downside. Sorry. However, it's still an area of volume to pay attention to. So we can begin to play that again. And you can see that price starts to react from it. And at this point, it's very clear that this becomes some sell side liquidity, very low resistance as well. So this becomes target number 1. If you could catch anything in here, good, and this becomes your target. However, what you have to be aware of is that there is no intention left here just yet. And I remember looking at this live time, there was no intention to really confirm that that liquidity had been grabbed and injected, and it was very tricky to play this move. I always like to wait for that gap to form and that inefficient pricing to form to confirm the intent before jumping into the market. And you can see that it took a while for us to really get that. So it would have been very possible for price to, wick this low, grab that liquidity, flip back to the upside, potentially grab the midpoint and then roll over. But you don't want to try and predict price. You want to follow what is being printed out in the data that is being presented to you, right? You have to be flexible. So here you see price, like I said, grabs the liquidity, and at this point you have to, again, just let price tell you what it wants to do. So here you see price breaches the high and ends up flipping over, which is more or less a liquidity grab. We've grabbed liquidity. Again, if we're grabbing liquidity, we want to see follow through. So at this point, we're seeing, is there any follow through? Bang, follow through is printed. Now we most likely stall at this level, leaving behind the gap. We can mark that out. Now, we said that on the weekly, we're anticipating the weekly candle expansion. Now on the daily, we're plotting out our main pools of liquidity. We don't want it to really be plotting out liquidity pools on the weekly and targeting them. We're building the narrative on the weekly, plotting our points or pools of liquidity on the daily, and then intraday trading into those levels. Hope that's understood. So this is what our daily is looking like right now. We've put in this low, which is very low to this, very close to this sell side liquidity here, which is more or less a given that we're going to trade into that. Right now, it's just whether we wick this before we pull up or whether we leave it open for price to then roll into that after pulling back up here, right? And this is kind of the first array we have left behind. You can also, mark out some order blocks and some volume bands. However, this for me, especially after such an aggressive expansion, this for me is the area I'd like to look into. We can now drop into those lower time frames and begin to look for entries. Let's go onto the hourly. Right, so that's where that gap is on the daily. Let me just make sure everything's neat and tidy. Right. Yep. Cool. So we'd be waiting for price to come into that level. We also have this liquidity up here, this buy side liquidity there, which is nice to have around that level because price can just pop up here, grab some more liquidity resting in this level, and then roll over, So you can see we've taken out this low, barely breached it. Let's slow that down a bit. Cool. So again, you have to be very analytical here. This here, right? Let's see. This on the 1 hour has not grabbed liquidity, right? This is a very weak kind of grab. This is more of a run to exhaustion, right? We have no target really here. We've ran to exhaustion. We're most likely going to pull back, grab some internal liquidity on this lower time frame, run up again. And I know this is hindsight. I remember seeing this, but this is what is going through my head in lifetime, that this is exhaustion. This is not any kind of significant money flowing into the market. We've ran up, right? We've injected, we've distributed off. We've become exhausted more or less. We're coming back to find some liquidity, most likely in these areas, right? In these areas here, and then we can pick up liquidity and then roll over. So let's go back into that hourly. Right, and what I want to do is mark this high, which also lines up nicely with that midpoint, right? And what you're doing here is just, you're waiting for your entry criteria. And for me, in this scenario, it would be a sweep of these highs here, a shift, and you're looking for a short. And you can see how we're building up this nice, liquidity target here for price to just run through. We've got this as well, which is just very nice to see, for price to just run through. Again, the nature of this pullback, we can, this is not injecting any liquidity. And again, that's what I mean by distribution lows. This is not injecting any liquidity. There's no intent behind this move. Again, so we wait and we wait for price to print its thing. Bang, shoots down. This is that. You see the difference between this, where we said that this was more exhaustion, right? And this was not an intentional injection of liquidity. This here is what we're looking for. Now you can plot out your little arrays, right? Bang, and you're seeing how the midpoint gets respected. We're respecting that bearish order flow. Bang, we pull up to perfection. We take out these lows, right? Bang. Now, if we go back into that daily, you can see how that has, how that narrative has played out, how we started off on that weekly time frame, right? How we started off on that weekly time frame up here. I know it's clutter, but it is what it is. We picked up that liquidity. As we said, we went to those lower time frames on the daily. We analyzed what price was doing, waited for that intention to present itself, and then rode the wave from there. We understood that anything against that was low probability. Anything with that flow was high probability. And you can see that from weekly, right? We make that low there. This becomes very low resistance, easy target. Daily, we mark that all out from that little order block there. Not the best order block, but we come down, we grab liquidity from here, we pull back, grab liquidity there, inject, bang, leave behind the gap, 50%, sweep that, grab, bang, lower. And it's just, again, that's the narrative. You see how we started off with the overall direction, then we dropped into our arrays, dropped into the lower time frame, got really analytical with it. That's that building the narrative and building context. And it will save you from a lot of situations. If you know the higher time frame narrative and you're on the lower time frames trying to get an entry and you're going against, you're going against the flows, then you can manage your position accordingly, taking profit a bit more, being a bit trigger happy with the profits and being more skeptical and reserved when trading against the trend. And yeah, this will save you from a lot of burnt hands that I've had to go through myself. But overall, I hope this video was very informative. I hope you guys found it educational. If you did like this video, please like and subscribe, and feel free to follow me on my Instagram. I'll link it down below. But yeah, I'll see you guys in the next video.